Hi there, welcome everyone to a live webinar with myself, Chris, at Admiral Markets. We're going to take a look at the charts, technical analysis, price action is the focus of today. But of course, within the topic, trading patterns, momentum, and support or resistance in the Forex market. So patterns, momentum, and support or resistance are core focus. First of all, though, be aware that this webinar is shown to a global audience, but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity for more details. Furthermore, please be aware that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. Alrighty, a quick look at the calendar tells us that today we had minute meetings from meeting minutes, from the Australian RBA, central bank there. We also have inflation rate in Great Britain, GDP growth rate in the Eurozone, Italy. So you can see some news events coming up. No, this is, let's see, yeah, correct, this is today. ZEW Economic Sentiment Index. Well, anyhow, you get the point. You can check all the lists that of events that are available by going to Analytics and Calendar. If you want a quick overview of the main events of this week, you can do that by going to Fundamental Analysis. You'll see the article mostly on Mondays, and you can see basically what are the key things that should we keep an eye on. And you can see that CPI is one of them, the Aussie monetary policy. So that kind of signals out the most important events for this week. All right, so not a big week ahead of us, but it's always good to know. So that's another shortcut for you. Last but not least, let's take a look at the heat map. The heat map is useful to see what kind of currencies and pairs are moving or trending a lot. There we go. Here we can see some stocks, some currencies up and down, and this is what I'm looking for. I like this one the most personally. You can see which pairs have a lot of volatility, 1%, minus 1%, and which pairs had a lot of direction. Basically, sorry, the other way around. Plus 1%, minus 1% is direction. 40, 80, 120 pips is volatility. Not a lot of volatility, I guess. Let me say it this way. Not a few currencies that really moved a lot, but actually a lot of currencies that moved a decent amount. So that's interesting. So you had a pretty big group here on the right, whereas sometimes you have pound odd and pound New Zealand moving a ton, but the rest not so much. So here it's kind of packed together in one group. We can see that the biggest movers, euro, pound, and number 3 is New Zealand. Dollar a bit quiet, together with the yen, sorry. So let's take a look at the market. All of this you can find on the Admiral Markets website. Among other things, there are many other things actually available as well, besides these two. All right, so the euro dollar, well, from my point of view, definitely not a good time to go long. It is strongly bullish, looking at price action on multiple time frames, looking at the trend on multiple time frames, right? It is absolutely bullish. We have a channel to the upside. You can draw that pretty simple by connecting these bottoms and these tops. And you can see the price is an uptrend. Price is making higher highs, higher lows. I think that that's pretty clear. And even on a weekly chart, it is, right? But 4 hour also clearly moving back to the long-term moving average, bouncing off of it. 1 hour chart, every time frame, looking at candles, trend channels, it's up, 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 up. But now is not a good time to go long, in my view. And perhaps some of you already know why. Maybe some of you already been here more often. If you are new in this webinar or visiting the second or third time, let me know if you have any questions along the way. You can use the chat and reach out to me. But here is not a good spot in my view, for me, because of multiple resistance layers that are right in front of it. Price is now at 109.95, which means that 110 psychological round level is only 5 pips away. So that's the key thing. Psychological round levels are important, are used by the market, and do have impact on as a support or resistance. So that's a no-no. It is the second time that price is approaching 110, but that's still a heavy resistance zone. It would have to approach it the third time before I think that a breakout is more likely. A second approach is 50-50 as a rough rule of thumb. 50-50 chance of a break or bounce. But 110 is a strong level because we have a previous top, we have the psychological level, as I said, we have the R1, we have the Keltner, we have the top of a bullish channel, at the top of the Keltner of a weekly chart. So it is a major level, and I don't think it's a level that it could break, right? But I would not trade it before it breaks. So this is not a level I want to trade into. Sometimes it does make sense. Like yesterday, early morning, just after Asian session close, we had a triangle like this. Trading that break makes sense because we do have momentum. We did have an uptrend on the 4-hour chart, and key resistance is still pretty far away. When putting this fib on, that's another resistance level, by the way. Another resistance level is this 88.6 fib, a deep fib of this fib. And the reason why I put a fib on this is that this could be a potential wave 1 or 2. The alternative could be an A or B, and price could go down for a 3 or a C. That's very possible, and it's been the most likely scenario so far. It's always scary when price kind of challenges resistance so strongly. Will it indeed respect it? Will it turn? And that's something that we'll never know. We'll never know for sure if price indeed turns at 110, or will there be a breakout? That's something that time will tell. But I think a bounce and a turn at this 88.6 fib is more likely than a breakout. But it is something that hangs in the air because there is strong momentum. So, and there is a strong uptrend on multiple time frames, and it's the second approach. So, the odds have probably swung to 50-50 now, I would say. 50 chance of break, 50 chance of a reversal. But if it is 50-50, which I don't know for sure, but that's my guesstimate, then I'm still more interested in shorts because this is my risk and this is my potential reward. Excuse me. Whereas if I'm taking a long, this is my target, or maybe even this small piece above it to the top of that channel, maybe to 110.50. But I have a big, big potential risk. I'm not even sure where I'd put the stop loss. But this is strong upside, so it's difficult to place a stop loss. One could, in theory, aim for 112.50. 112.50 up in here, the next psychological quarter level. Put the stop loss below this bottom. And R2R would still be okay. But from my perspective, it is better to wait for a candle, today's candle for instance. If it does break, I would wait for this candle to basically break above that resistance level, above 110.20, 110.20, I guess. And show a close near the high. A good close near the high, today's candle or tomorrow, and that could be a serious breakout, And that could have far-fetching consequences because if price, the euro dollar starts to break above 110, it is, the dollar strength is really showing some weakness, in fact. Now, I wouldn't say that the dollar strength scenario is totally out of the window, but I would say it's definitely on a serious winter sleep at this moment. So it's a key level from that perspective too. For the dollar, I would say as well. So let's see if we get a turn. If we get a breakout, I'm looking for a daily candle. Very simple, above 110.20 with a good candle close near the high. If we do get a reversal, I want to see bearish engulfing twins, a bearish price action, candlestick pattern at the 88.6 fib. So far, we don't have it. So far, we had one on the 78.6 fib. All right. I didn't trade that one yet myself. It was somewhere in the Asian session. No, it was a New York session. End of New York, probably. Excuse me. But I didn't trade that one. I was waiting for today. Also waiting for yesterday's candle to close. And yesterday's candle was bullish, you see? So that's why price has already broken above yesterday's high, which is the minimum we would expect when we see two bullish candles like this. That the price gets broken, breaks the high of the previous day. So those things have happened. Price did break above Friday's high. Price has already broken above yesterday's high. So the minimum that we could expect has happened. Now the question is, will price turn here? And it doesn't look like so at the moment, but I will wait for the end of this 4-hour candle to see how it looks like. If it's something like this, reversal does not look likely, and I wouldn't take shorts. I wouldn't take longs either because, once again, I'm looking for daily candles. 4-hour candles, I'm only looking for shorts today. Daily candles, I would consider tomorrow. So it depends on how this candle or the next candle looks like, if I would be willing to take a short and see if it can fall from this 88.6 fib. Alrighty, yesterday's video, recap video, which you can find in technical analysis as well, analytics, Admiral Markets website, analytics, go to technical analysis. You'll find Nenet's, basically his vision on the pound New Zealand and my vision on the dollar. I'm already indicating that's a reversal or breakout zone. And the same is true for the pound. Is this a turn with head and shoulders potential, divergence? The trend is your friend until it bends, and this does look like a bit of a bend. So I'm not 100% sure yet because it's bending very slowly, and it is not really reversing very strongly at this moment, but it could. It could do both at this moment. I would consider basically this to be a no man's kind of a territory which could go by either way. Let's say no man's territory, and I think that from this perspective, the pound is not so interesting today. Yesterday I had a wick. The day before was a doji, a wick, a doji. And put that into the context of a sideways move that has already occurred for 2 weeks. And I don't think that that's particularly that interesting to analyze or trade. But from a larger time frame perspective, I do think that price is getting into a resistance zone that could be very critical, 129, 130. And basically could be a bounce or break spot too for price right here. All right, so I think it needs to break a bit higher before it really exceeds long-term weekly resistance. But if it does break above this top and the R1, there is some space to the upside up to 132. it needs to break above 130, and then there is space to 132, so there could be some breakout to the upside. I would try to trade it on 4-hour charts if it happens, when it happens. Could be today, could be tomorrow, could be next week, who knows. For the moment, price is going sideways. Or if it breaks to the downside here too, I would be waiting for a strong daily candle to poke through the support level with the candle closed near the low. That's a signal for me to look the next day, the next days for continuation shorts on the pound dollar. So that's my game plan, is to wait for daily candles in relationship to 130 and 128.50. Sorry for that. Sorry if I'm coughing sometimes. It's been bothering me for a few weeks. I'm trying to get rid of it. I had a bit of a break the last few weeks, and that's why we had some less webinars than usual, and which is great. But ironically, that's where I have this annoyance with coughing, so it's a bit annoying. But okay, what can you do? That at least we still had a good vacation and enjoyed the seaside. It was not really that warm yet. I mean, it was warm, but it was not that we're jumping in the sea. We did it once, the very end, and it was very chilly. So it was nice to have a good spring because there the weather was already a lot better than here in Prague, but it was not really like summerly, obviously, yet, but still, it was all in all, it was a good 20 degrees, so we did good walking and stuff like that, so it was good for that. Just not for swimming yet. But now we're back in Prague, and now Prague is warm as well, and so got some good weather, good months ahead of us, because I'm personally a spring summer fan more than a winter. I don't like winter that much at all, actually. So for me, this is the best. May is the best month, actually. Not sure what. Do you have any preference? For me, it's May. Clear winter. Absolute the best. Best weather. Still, everything is like, spring-like and stuff like that. So I'm enjoying it. Let me know if you have a preference. We'll see. We have a competition. So dollar yen. I was skeptical a bit about the upside potential. Yes, it is an uptrend, but from a wave perspective, I figured out that there's a good chance that there are 5 waves could be completed, which means we might be in an ABC motion. So good thing to keep an eye on is, yes, Craig says October to March, but he's from Australia, so for him it's the opposite. That's his summer, actually. So that's so he has the same, also more of a summer type person like myself. It's funny that it's the other way around, but that's how it goes. Difficult to imagine for both sides that we have the opposite, but it's funny, isn't it? So resistance right here, pretty good, pretty important. Pivot point challenged right now. Let's take a look at this 4-hour candle. This 4-hour candle, I think, could be critical. If it closes anything like this near the low, I think there's a good chance of a continuation and a breakout. Excuse me. So let's see how price behaves with that support line. It already broke this support line, as you can see. That was an early indication that the uptrend might be in trouble. The next one to keep an eye on, perhaps, we could perhaps draw something like this, for instance, or maybe not even use this bottom, but just use this bottom. Let's take a look at the hourly chart. There we go. It looks like we're getting an hourly breakout right now. So 40 minutes from now, taking a look at this hourly candle, and once again, the close near the low. It's a good sized candle already. So if it's a good close near the low, I think that could be a breakout candle on the hourly, and that might translate into a 4-hour breakout candle. 4-hour is more conservative, hour is more aggressive. So it all depends on the type of trader you are. If you feel that this setup, a setup, has better like probability, using an hourly chart is okay. It's of course riskier, but earlier too. If you have more doubts whether the breakout is ready, if the breakout is a good spot, then using the 4-hour chart is better because it gives more information and hence also is more reliable as a breakout indication. So that's something to keep in mind. Now the reason why I was looking for downside 5 waves here, just quickly want to show the potential 5 waves. Hence I thought that this could be an A and this could be a B and this could be a C. On the hourly chart, this A, I managed to find 5 waves, and I say managed, really literally managed because it's not looking that neat, but technically it could be 5 waves. I always say could because it's part art, part science. That's one of the reasons why I guess waves are sometimes not preferred, because it does take experience as well to get a feeling for waves. But not a beautiful looking 5 waves, but maybe doable. The upside on top of that was also choppy. Another reason why this leans to an ABC within a B. So this could be a potential A, this could be a potential B, might go down for a C. So within that context, if I put a fib from here to here, 50 fib, 61.8 area, and the target minus 272 target and minus 61.8 target. 112.80, 112.50. 112.50 probably the most with the S1, and the minus 61.8 target is anyhow a bit more important than the minus 272 target. So an entry after this candle closes like this, if it were to close like this here, gives about 80 pips to the target. Stop loss, well, we would like to stay within a 80 pip stop loss, which means that 114.10ish is the highest we would like to go. One could use 113.90 above this top. One could go above this top. I think this top is probably a bit safer. This top is even the safest, but that's too far away for a breakout trade, I think. And the reward to risk ratio is therefore yeah, it's below 1 to 1 and not worth it. So I would say it depends on how it closes as well. I mean, if it closes something like this, I would rather go with this. If it's really a good close near the low like this, it might be we're even sneaking in a stop loss above this. But it is risky. I want to emphasize that price might make a retracement back like that and then fall like this. So, that's something you really want to consider. Sorry. Well, first step is to see how it closes. Also in relationship with this Keltner. Keltner is like the Bollinger Band, but better. It's part of the Admiral Market Supreme Edition. And I like it more. Well, it's not necessarily better. It's it's what I prefer because it doesn't inflate and deflate as much as this Keltner. Once it gets down to the minus 61.8 target, I think that it depends on how price responds there. Is there a bear flag? There could be even a further correction. It could actually correct all the way down to, for instance, like a 50 fib here, a 61.8 fib. Those are all potential bouncing spots. It could be correcting this leg. All right, Aussie, I don't even want to look at lower time frames on the Aussie. It is getting actually quite annoying. No offense, Greg. Not talking about the people, I'm talking about the AUD-USD, of course, um, the currency pair, and the Aussie is basically just going sideways. Triangle, and is such a small range. 69, about 70, what is it here? Let's take a look. 77. It's not even that bad, actually. Okay. Well, anyhow, it it is now halfway that range of 700 pips. It's not that bad, actually, 700. I thought it was smaller, but okay. On a monthly chart, it looks small. And main question is whether this is going to be a triangle for one more break lower or a reversal higher. So that's still the question, and it remains open. The price is now about halfway, bouncing a bit to the upside. So I really don't have any favorites for this at this moment. If anything, we need price to get down to the bottom or to the top for break or bounce. Just not a big fan. These are bullish candles, I know, but and there is a bit of a channel here. So if anything, if you really want to trade the Aussie, which I personally don't see the reason why, but then it would be a breakout to the upside. This is the third attempt of the R1. We actually already broke a bit above it here. So if anything, a move up, I guess 4-hour candle, probably with the close near the high and a close above the R1. Something like this, for instance. And there's a good chance that it will then continue, if it does that, to within this channel to the R2, to 74.75. Let's see what Craig says. A little dip below 74, but back again over 74. Yeah, 74 indeed. Right about here, and broke above, hooked back to it, now bouncing off of it. So if it breaks above the R1, that could be something on the Aussie within this channel. And Craig mentioned New Zealand. Let's take a look at the Kiwi. This is a different template. This is the template I used last week, Thursday, I think. Well, no, 1.5 weeks ago, about new or intraday indicators, I think it was. So this is one of those moving averages, and the oscillators I was using, and just wanted to leave it on one chart so you can take a look at that. Excuse me. And looking for a trend. Let me double check if this is the right one. No, this is the correct one. Sorry. Okay. Anyhow. I was already wondering. It didn't seem totally right. So at this moment, price is not in a trend because it's below the long term, but above that fast-moving HMA. So it is not in a trend on the 4-hour chart. Hourly chart, we could say, is trending up. Oh, wait, hang on. I have a small mistake in the template. 1 second. All right, let me save this quickly. There we go. All right. Daily chart is in a downtrend, but it's daily chart, so those trends take longer to take place. Yeah, it's basically trying to break through this, but hasn't, and is struggling to do that. So it could be a bouncing spot. Sorry. Could be a bouncing spot indeed. Pretty choppy 4-hour chart. I think the high time frames are showing a downtrend. So to summarize, yes, but price is bouncing at this moment and struggling to break support. So that bounce could continue indeed. But all in all, everything is quite bearish on the long term. So I would want to be careful with that. Just something to be aware of, from that point of view. Now, on an hourly chart, it is already aligned to the upside indeed. Um, Let me add the fib sequence levels. Now I'd have to use this bottom actually from now on, but I can use multiple bottoms. It's okay. Let's test this bottom first. All right, there we go. And we see that price has reached the second level. So for a real trend to emerge, we need price to break above 69.60. And if we add this tool to the newest bottom, it's got quite a lot of space to go, 70.20 before we're really in a trending mode. But let's check the 50-minute chart because the hourly is trending, so maybe the 50-minute chart is at a different spot. All right, price hit the fifth level. Let's move it to the new bottom. There we go. All right, still within the third level. So it needs to break above 69.08. 69.08. For me to see uptrend continuation, I would like to see break above it, a small little hook back like this, and then a continuation breakout up to the fifth level at 69.60. So something like this, right here between 69 and 69.60 on a 50-minute chart, that's the sweet zone. Within this 1 hour push up. All right, so at this moment, that's what I would be waiting for. If you're already in the trade, for instance, Craig is in the trade, let's take a look at that. So far, so good, I think. There's 1, 2, 3, 4, fifth candle. So if the next one, the next 4-hour candle fails to continue and is bearish by any chance, like for instance like this, then I would be cautious. And I would, or even if it's not even that big, but even if it's like a bearish candle like this, for instance, I would not, if I would be in the long, I wouldn't like the long scenario anymore. I think then that case, there's a good chance that price could be completing this retracement, and whether it could be a reversal or it just makes a bull like that remains to be seen. Could be both, but in any case, that bullish potential momentum has subsided, and I think that uh, we'll take a pause before it probably will continue. So next two candles on the 4-hour chart I think are important, and basically the break and continue has to happen within those two candles for this momentum to stay alive, let's say. Oh, that's good. Yeah, definitely, definitely some breathing room. That's great. 68.50 is around here. That's great. So from that perspective, um, yeah, that could mean that you might even think about break even now or when those candles appear, right? So something to consider. Great. That's at least what I would do. So gold is kind of bouncing off this 50 fib, and that might be the bounce. That might be the turn. Bullish candle. So let's see if this is the lift off of gold up to breaking this resistance and then perhaps even further. Perhaps up to, yeah, who knows which one of these targets. It really depends if this is a 1, 2, 3 or an ABC. So this is a bit slow start, but it still could qualify as a 1, 2, 3, 4, 5. After that, let's hope for an ABC, which would bring a price back to maybe this level like this. And there could be a, let's see, there could be an A, sorry, like this. And there could be a inverted head and shoulders. Sorry, I forgot the name there for a second. So that's something that could happen. So I would probably rather wait for price to get back down to this pivot point. If it happens, I don't know, but that would be ideal because of this pattern. Let's take a look at the euro yen here very quickly. There we go. This is the third level. Price still in an uptrend. So this could be a consolidation for an upside. So let's see if this HMA turns. If it turns, it's breaking. It broke above the third level. This is 0, 1, 2, 3, and there could be a continuation up to the fourth or the fifth level here. 125.60, 127. Those are potential possibilities here for the euro yen. Now it's already on the 4-hour chart moved quite a lot. Let's take a look at those zones. All right, there we go. This is 3, 4, 5. This is 6th. This is a 4-hour chart, so it should be okay. It's a bit different than the hourly chart again. 126.40 is the next fib sequence level. So there's still some space. And I wouldn't be surprised to see one more push within this strong momentum. Now the euro yen looks a bit better than the pound yen to me. Euro yen already broke the high. Pound yen is around the long-term moving average. And we can see that the euro pound is fueling that because it's moving up. So euro yen looks a bit better for upside than pound yen. If for whatever reason, we're looking for shorts, well, I wouldn't look for shorts anyhow. This is also pretty strong momentum. And in fact, once the euro pound might make a correction, the pound yen might start to move. It would be good to keep an eye on a trend line like this, for instance. Let me make that orange. For such an uptrend continuation, right? Break above the weekly pivot point, and that trend line could see, with a good 4-hour candle, could see a breakout there. So those are things I'm keeping an eye on. Otherwise, we'll just scan some other charts to see if something catches my eye. Or do you have any particular pair in mind that seems interesting? pound odd has really accelerated far, far, far. I mean, this move is 1,400, almost 1,500 pips from this bottom. So it's a tremendous push up. Really, really, really huge. And it might still make one more push up. Maybe. There is double divergence, so it's something to really, really consider. I would even skip that idea, actually, because look at that double divergence. Very risky. There's actually probably a better chance it will collapse or not collapse, but retrace back down to S2 and fall like this. So pound looking weaker at this moment, I would say, relatively. So yeah, that's something to consider. For Craig, yes, that would make it more expensive indeed uh, to go to Brighton. But if it continues lower like this, well, I mean, that was of course perspective. I mean, back up in here, it was a lot worse, of course. Obviously, a few years ago, a few years before that, it was a bit better indeed. So it's kind of like in the middle, I guess. But yeah, big movements on this pound odd indeed. But yeah, I'm scared that from your perspective at least, that this leg could be finished. In that case, we might be building a new leg, but the question is how far will it go? One way to answer that could be to put a fib like this. Could go just simply to these targets, and that's it. That's one scenario. Or of course it could extend further to that. That I don't know. For the moment, it hit the minus 272 target and kind of stopped there. So the question is, how much will it retrace before continuing? I would expect it still to continue to the minus 61.8 target. Wait, we must consider though the fact that price hit the 78.6 fib though. Technically, the official target is the minus 272 target. So actually, I take that back. Actually, the main target has been hit. So something to be aware of. Plus the divergence, the double divergence, makes that, for the moment, the break of the channel, I think that there is a good chance that price will continue down to the S2. Then it all depends how much momentum can be found here. Will price make more downside like this, or is this just a correction and will it break higher like that? That's something I will still leave open for the moment. We can analyze it again tomorrow. All right. Some others, maybe no one mentioned a particular pair they had in mind, so we can take a look. New Zealand is getting a bit choppy. S&P 500 is reaching the minus 272 target at 24.25. Let's see if price respects that level. DAX going sideways. Impressive numbers, almost 13,000. Quite impressive that during the financial crisis, DAX was all the way at 3.5 and has now effectively almost quadrupled that. Especially this run up here was very strong. 2011, 2015, these 4 years. Big correction, but a new run up started more or less here, right? Last summer. Still lasting. But as this breaks the top, let's see how the oscillator handles itself. And I wouldn't be surprised, of course, that eventually this hits a a stopping spot, and then there could be divergence between these tops. Well, oil is really challenged. These trend lines hard. Got three-wave move up like this, down, and now moving up. I personally don't see anything that interesting at this moment. For those that follow the check round, Euro check round, as I said, around 27, the intervention will be stopped soon. I said that around here, and was hinting that it could be, any moment or within 3 months. So it was actually pretty quickly after that moment that I mentioned it, which is coincidence. It was not something that needed to happen, although there was, of course, a central bank meeting within a day after that analysis. And I was talking about various scenarios. In my mind, one of them was upside actually, rather than the obvious downside. And that happened indeed. Look at that, 2720. It didn't go up as much maybe as I thought it could. I thought it could maybe even reach 2750. That was too optimistic or too bullish. It went to 2720, then got slammed down with a couple of bearish candles. It retraced all of that bearish candle, in fact, the first part of May, and then started a slow grind down in the second part of May. So it's down to 2650 from 27, and at the peak 2720. Small movements compared to what we normally look at. But when there's an intervention like this going on, it is something that always catches the people's curiosity and always something that sparks interest. And it makes sense. I mean, I'm not a big fan of central bank interventions, nor a big fan of trading it, in fact, at all. But Euro Czech crown downside was one of the ones that was, from my perspective, pretty sturdy perspective. All right. I don't have much else to share with you at this point, I think. Not that I can see at this moment. So, well, that will wrap it up. For more analysis, you can go to analytics, Apple Markets Analytics. You can go to blogs for articles. Just a small kind of tip here regarding my own article. You might want to check out last week Sunday's Bullish Economy and Inflation Faces Bullish Technology, May 14, because it kind of dabs into potential rebound and when and what might lead to recession, what could actually fuel a recession further, which by a small hint, could be technology actually. So just throwing in some ideas that I have I have in my mind, and this is not to say that this is going to happen. This is 100% sure. This is just kind of long-term thinking ahead about how things might play out. But I think it could be still worth it to read it so that you have an idea. Maybe you know about it already, most of it. Maybe some things are new. And so you can think about it yourself. Maybe you conclude that you don't agree. Maybe you conclude that you fully agree. At least you're aware of these potential trends. And that's one thing. And for MetaTrader 4 Supreme Edition, of course, platforms find it right here, the Keltner, the pivot point, and a lot of other indicators, indicator package, mini terminals, and you have the Whip Trader too if you're find it easier to use a browser instead to log in, you can do that with the WebTrader version. So we'll wrap it up. From my perspective, dollar very critical, and wow, looking at this, your dollar is not turning. So I think now at this moment, looking at this candle, the fact that it's trying to push above 110 at this moment, I think that the idea of this being a reversal spot is starting to, the odds for that are really diminishing strongly now at this moment, right? Whereas when we started the webinar, it was 50-50. Now I think that today's candle, let's take a look at today's candle. I'm looking for still the same plan, right? I'm still looking for today's candle for a bullish breakout. But I do think that the reversal idea I had in mind yesterday and today, which I haven't executed yet because I was looking for the best signal on the 4-hour chart today, is not something I'm going to do. It's something I probably threw in the waste basket right now. I mean, it still depends on how this 4-hour chart, this candle will look like, but it has already broken so much above this 88.6 fib that I think that that's out of the window for today. So for those that took longs in here perhaps and are holding on to that, great job. I personally had too much respect, maybe. No, not too much, but I respected the 110 a lot, so I would have, not been able to live through that. So I'm not in that particular breakout as we speak. But for those that had that stamina, let's say, or holding on to that trade ability, great job. Seems like the 50-50 turn it to the bull side at this moment, I think. All right, so dollar yen, same thing though too, could be a breakout, as I said. That looks probably more likely as well. Dollar weakness could fuel that breakout to the downside. All right, folks, well, great trading. Hope to see you tomorrow. By the way, tomorrow, more webinars with Animal Markets. You can check that out right here with at the top with education, and then Forex and CFD webinars. Tomorrow I take a look at candlestick patterns, then I take a look at live trading session, and then we take a look together at support and resistance bands on Thursday. See you soon. Cheers.